was Jay Powell. Apparently, he didn't lower rates.
That's true. So, hello, everybody out there. We've got Jeff Lutz, but we have him right now. We have him on the phone. In a few minutes, we might get to see his beautiful face, but in the meantime, we'll have to just deal with his voice. Hey, Jeff.
How's it going, Randy?
I'm great after another beautiful day on Wall Street and with Tesla. Um, Roller coaster comes to mind.
Yeah, yeah. I mean, it's the volatility picked up. It's kind of like it's not too surprising, I guess, seasonally. Back half of July is usually that way, but you never try to think the market just purely operates, in one way. It's usually indicative, but of other things. But I mean, I think some of the, I think everybody was betting against the AI trade, and the hyperscalers are telling you you're stupid if you bet against it.
Yeah, right. We have one sort of almost maybe could be bad result, and it kills the market for the day. But I think it's also maybe partially, obviously, this whole decision by the Fed. We'll talk about that in a minute. But I think that's probably impacting as people are trying to figure out which way that's going to go.
Yeah, it was kind of like I don't know. It felt like, I don't know, like junior high or high school, and like passing notes back and forth, like, do you like me and do you want to go to the dance together, versus like just come out and actually do it. Like it feels like for that Fed meeting, it's like they were ready. They were ready to go, but they just didn't want to go. And literally the first page in his binder when he's answering questions is how he would handle a rate cut, and or his thoughts on a rate cut in September. And they basically said, we're going unless something weird happens.
Yeah. So you had mentioned in the green room before we started that you think the one besides the obvious things that the street are missing, like energy and Robotaxi and Optimus and all those things, you think they're even missing on the unit volume, and that margins would be one thing, but unit volume you believe is going to be substantially higher in 2025. Tell me about it.
Well, I mean, it's not what I believe, it's what Tesla says. And Tesla is, they're when they need to be conservative, they're conservative. And then when they need to guide to a different number, they guide to a different number. Usually the number that they say they're going to produce, they get pretty darn close to it. So, Tesla said this in the Q1 earnings deck when they introduced the concept of these interim vehicles. And what's nice is in the Q2 deck from last week, they solidified it, which means when you're thinking about it from a supply chain or product development perspective, when you're basically 2 quarters away from that activity commencing, like you really know what's going to happen. Like you're in the it's going to happen. If they backed off of what they said in Q1 about increasing production 50% over 2023, then I'd say something else, but they didn't back off of it.
Okay,
So um, so if you read I think it was page 10 in the earnings deck, where under the product section, they get into what they're doing in 2025, how they're going to leverage capex. And this is minus the 2020 the 25K vehicle. This is everything before that.
okay, so
But they
this
said they're going to increase production 50% off of the existing capex.
I see. All
That's a
right,
big deal.
so we would be talking about maybe the Juniper punching up sales of the Y. We'd be talking about maybe a continued increase on the Model 3 with all the good stuff that's going on with that. We'd be looking at the increasing numbers of Cybertrucks, and then finally we'd have the new Gen 2.5 vehicle.
Oh yeah, if you call the Gen 2.5, yeah, these interim vehicles, yeah, and that's before they ramp the the newer platform vehicle in the back half of the year. So So I think analysts are missing this because if you look, I mean, and Gary called this out in one of his tweets, and he credited me, calling this out. I think Sir did as well, and I just it's getting missed, and everybody just wants to dismiss auto for some reason. Like it's not cool to talk about the number of cars Tesla's going to make next year.
Right.
Everybody just wants to talk about autonomy and talk about robots, and those are great too, and I would want to talk about them too. But Tesla's got other. Tesla says they're going to make a lot of cars, and if you look at it, if you think about it, the way Tesla's supply chain is designed, they entered into this, call it auto slowdown, probably before everyone else, because they don't have that luxury of padding inventory. So
right.
they don't have that dealer network. So is acting kind of like a shock absorber for their business. So Tesla has very low network latency. So they saw it early. That's why they did the reductions. They did all those actions related to getting fit in their business. And now they're kind of on the other side of it. They're hiring, they're talking about expansion of manufacturing footprint, again, in existing facilities. So it's I just think it's fundamentally getting missed, the unit picture for next year.
So we could also be looking at a perfect storm by the fourth quarter, as FSD is completed, meaning, just the actual features will be complete probably within weeks. And then maybe FSD being solved, which might be by the end of the year or sooner. And then you've got interest rates coming down. And then you've got, as interest rates comes down, that might start to stimulate the economy by the end of the year or the beginning of next year. We could be looking at a perfect storm even before we get into 25.
Yeah, and I think that could be in Tesla's calculus as well. Because I put the question out there, and no one's giving me a real solid answer of like, why would they be so aggressive with their production volume? And one of the reasons they could be is this whole commentary Elon was having this weekend just about, the 3 and Y. They kind of look like normal cars when you look at them. But then when you realize that they can actually drive themselves, it's kind of changes the conversation, right? The dancing cat.
Yeah, I keep being this, I think I'm the odd man out. Maybe so few people are talking about the Juniper. I mean, there is no doubt in my mind that the Juniper is going to change the sales of the Model Y even before people get all excited about the thing driving itself. I mean, the changes that are going to be made on the Model Y are going to make it a much better car.
Yeah, I agree. I mean, Model Y is the #1 selling car in the world. And, Tesla's going to update the aesthetics. They're going to update performance, a number of factors. So it's going to be a huge factor. And to me, that's part of that story for next year.
Right.
In terms of unit volume is transitioning to that vehicle.
All right, so we talked about 12.5.1 a second ago. I understand that at this very moment, you are driving around town using 12.5.1. So what's your take?
Yeah, it is. It's the equivalent. It's like a major release. It's kind of like going from, even though Tesla's titling them point releases, they're so big that the performance improvement is so big that it's really feels like you're going from V12 to 13. And it's hard to put a metric around this, but and Tesla has the real dashboard of metrics. So, and I've seen some people trying to do some crowdsource reporting on interventions and so forth, but Tesla has this data. They know how it's doing, and it's a significant improvement. it's to the point where I can't remember. First off, I haven't had a safety intervention. I can't remember when I've had an intervention. I've had the 12.5 series since last week.
Since
And
last week.
yeah, and I can't remember the last time I had an intervention. Now there's things where you got to get used to it, right? You're putting yourself, you're letting the car be in control, and it's doing a unprotected left or something, and like, what does it see? Does it see what I see, and so forth? But it's significantly. It drives like a professional chauffeur. Like, you're not getting jerked around. It knows when to speed up. It knows when to slow down. Getting the speed right. It not only feels like human. It feels like a great human driving. You know what I mean? Like, so it's a great experience. I'm very pleased.
Yeah. So something about, well, a lot about the development of software and products that require these kinds of revisions that still need to be done to this particular one. What do you think is needed? I mean, it's in addition to making it complete, reverse, summon, etc. In addition to those things, what do you see that needs to be done? Well, and the obvious thing of even fewer interventions, but is there anything? What else? Is there anything else left?
Oh, there's hardcore development that's left. I mean, the car doesn't go in reverse. There's real development that's still left to do. So I'm not in this camp of like, it's done, but I am in this camp of being able to see like the other side of like, this is doable. Like, they're really getting this done. And now there's these features they've got to integrate, like reverse, being able to do a proper 3-point turn, things like that. So we're getting close. We're in the final. We've gone from the like, is this going to work or not, to, well, it's clearly working. It's clearly doing the point A to point B driving. And now it's like, okay, well, it drives great forward. How about reverse?
Yeah.
And how about a 3-point turn? And, how do these things work out for us?
Yeah. Okay. So Chairman Powell, as you said, it sounded like he just didn't want to quite, that several people were on the committee were ready to make the cut, but they convinced them to all vote unanimously for no cut this month. But it sounded like he was all but saying that it's going to be at least a quarter point in September. Any color that you'd like to give to that?
Well, I'm concerned that it's not his style to have not signaled to the market the cut and then the cut. So I'm not surprised that we didn't see the cut. I'm surprised that he didn't start signaling earlier that we should be going in July. And we got a really soft labor number this morning. And I'm just really, really surprised that that they didn't really set the market up 3-4 weeks ago for this. The market's been thinking this is coming, but it has really been anchoring on the December timeframe. So I'm a little surprised. I mean, I wasn't surprised to get to the meeting and to not see the cut. I'm surprised that they let it get to the meeting and they weren't ready. They weren't set up to actually cut.
Did you see the interview with the McDonald's CEO yesterday on CNBC?
I heard of it.
Yeah, he was saying all segments that, yes, the folks in the lower income categories are by far the ones that are being the most choosy and coming to McDonald's less, but that even the upper segments were backing off and being more selective. You might have gotten into a bad location.
How about now? How about now?
There you are. There you go. Go ahead. Yeah.
There's enough data out there now. Just, if you just look at the Somme rule, the, employment going up greater than, 0.5% in a cycle, or 500. Sorry. Yeah. Going up. Yeah. Sorry, going up 50 basis points in a cycle. And then, we had the soft labor print this morning. We have inflation basically at 2.5%.
Right.
And the plan has always been like, well, we're going to go before it's at 2%, and we're going to cut. I don't know what happened to that plan.
Yeah.
Because we're right on the precipice of that, and we're not cutting.
Yeah,
So
I think the theory would be that they're looking for the directionality 3 months in a row. I really think that's what it is. And that's why they needed one more time. I'm not sure why, because I don't know. I mean, services are getting soft. And I don't know where the services would regain their footing right now. Housing could be an issue. Housing had some strong numbers this morning, and housing could start picking up again. Although I said the other day, maybe you can give your own impression on this. I think maybe even if the mortgages come down, people might be getting right to the end of what they can afford.
yeah, I mean, it's hard to say on housing, but it looks like, we're at a point now where inventories are coming up. It's people that are they could be getting forced out of their homes. Like, we don't know the actual reasons, but with the inventories coming up, the sales are going to come up, and that's going to allow some more starts to occur. But I just don't understand. We have 2.5% inflation, and we have a 5.5% funds rate. So why are we so restrictive for this long? They have a dual mandate. They have an employment mandate, and they have an inflation mandate. They can't do it all themselves. There's things that they cannot affect the cost of, no matter what they do. So I think it's gone on too long. I would have liked to have seen them go, but they would have, for the fit inside the way the Fed operates, they would have had to have like set the market up 3 or 4 weeks ago.
What do you think about the auto numbers over the last couple of weeks?
No, they're not great, and I would say, they're entering into a slowdown, and it's been a delayed entry into that slowdown because of their network latency and how much inventory they carry. So they have a very long channel network, and they've got a lot of product into it. So what they're doing is basically, if you look at some of the sales figures from some of these big OEMs, they're reporting either flat to slightly, single digit increasing sales, but their inventory is literally doubling year on year. And that's a fundamental problem. That's indicative. As soon as you start overrunning your inventory the way they are, at some point this is all going to come crashing down. So that's where you see Stellantis is, shutting factories down and laying off people, and they're probably getting hit really hard in North America, and it started hitting their earnings, and then Ford as well. And it's going to be not too long for the others. The best supply chains will win, and the companies that are set up in the growth categories will win, which are EVs. And the best supply chains are Tesla and Toyota. They're probably going to do the best in all this. The others are in for, I think, for some serious pain.
So how does so basically then Tesla would come out of this earlier than the others, since they went
Correct.
earlier, they would come out earlier because they don't have to sop up that inventory.
Correct. And even Tesla made a decision that I think people are not looking at the second quarter the right way. Tesla could have built more cars in the second quarter. They physically have the factory capacity. They could have taken some more of their cost reductions to the bank and added those to the production pile and taken their COGS down. They didn't do that. They wanted to increase their, they wanted to decrease the working capital on the balance sheet, and they wanted a very quick and fast supply chain. That's what you want in a slowdown environment. You don't want to be holding a bunch of inventory. So if it's a, if I miss, gross margins by 150 or 180 basis points, or I could dramatically cut my inventory, I'm going to choose into a slowdown. I'm going to choose dramatically cutting my inventory, because I know when I come out of this with lower inventory, I can bring in my COGS reductions faster. I can flip that gross margin much quicker if I have lower inventory. So it's not making an excuse. It's that, they should have had higher gross margins. There's reasons for that. We've talked about with the Cybertruck, with their lower builds and so forth. But if it was a trade-off between the two, and partly it was, I think they made the right decision to decrease inventory at this point.
So one question that I have about the factory side, which is we've had this announcement that we are now have a full-on Cybertruck with dry cathode 4680s in it. Do you have some clue as to where that means we are in that process? Does that mean that is that one Cybertruck now driving around with those with some kind of testing going on, or is that just an announcement that they've achieved the fact that they have enough to put in? Tell me where you think we are on that and the impact that will have on production.
Well, for anybody building a product like, this multi-stage, battery production or so forth, you want to get through unit testing internally, and you want to get to some threshold, whether it's a volume of testing or it's number of test cases executed, where you can make a decision to trigger the rest of your supply chain and trigger the raw material orders and trigger the assembly start. These supply chains could, typically have, about 10 to 12 weeks of lead time. And if you look at it in physical terms, it's much less in terms of the time, and the dry cathode process is a shorter time to build a process. But in short, to me, that's a test vehicle. They'll make more test vehicles, and they'll do a bunch of other internal testing. We don't know where they're at. We know that they've gotten to the point where they feel confident of integrating it into a vehicle and then a human being driving it. We don't know where they're at on the rest of their test cases, but it sounds like they're targeting to be in production by the end of the year, I believe. And that's not unreasonable given where they're at today.
Okay, so we've got no significant catalyst other than 1010. Well, yeah, until 1010, because the earnings call will be after that. So there's nothing really, no real big deals between now and then. Would you anticipate the stock continuing to move towards the 260s, 270s, maybe even 300 in FOMO before the 1010? Or what?
I mean, it's hard to say. I'm not a stock per se daily or weekly prognosticator. But these are techniques. It's near these technical levels of 220, 230, this multi-year downtrend line. And if it can stay above it and close, and it looks like there's a lot of, I would say significant volume to kind of keep it up there and push it up, I think that's a good thing. September's seasonally not a good month for tech, but you've got NVIDIA earnings, I think the last week in August, and I think that will be defining. I think, if I were to project, and it's not financial advice, it's just an opinion of, a top, 5 customer of NVIDIA is Tesla and xAI. And I believe you're going to hear them talking about, shipping into these major Tesla and xAI clusters, and that, Tesla is an AI leader we heard the Microsoft, and nobody's, by the way, discounted what I've said. We had this Microsoft earnings call yesterday, and they said it's either in the quarter or cumulative. I'm not sure, but either one's a bad number of 10,000 Copilot licenses, seat licenses. And I looked it up. I'm like, well, what does this mean? Is this one license per company and there's thousands of users per license? And they're like, no, it's a license, it's a license per user. So it didn't make sense to me. They haven't been breaking out their AI, sales. They haven't, this is the first one that they've shown any color. And I think the reason, if you put all this together, why haven't they been breaking it out, is because the numbers are low. Just like Tesla FSD V11, there was only one time they actually broke out the number of users on it, and because the numbers weren't high enough. So anyway, where does this put us? I think Tesla. Why am I saying this? I think the hundreds of thousands of FSD users and the millions of controls and interactions that are needed to drive these vehicles all over North America. I think there's just tremendous more AI utilization in Tesla products than there may be in any other product right now. It's arguable, but it may be true. So anyway, Tesla's a top player in it. And I think, as they start getting more and more billing for that, these funds are like, okay, if I think AI is the future, I'm going to be, it's going to be in that basket of stocks, because the prior basket of AI stocks did not include Tesla. It was Amazon, NVIDIA, Microsoft, Broadcom, and in Meta, and it wasn't in Google. It wasn't Tesla included in that conversation. And now I think you're going to hear NVIDIA talk about, how far along Tesla is in full self-driving, just like they did on the last call, and how they're the leaders in kind of this real world AI, and they're part of it. I mean, NVIDIA is a big part of it. So on the training side. So anyway, why am I bringing that up? It's between now and at 10:10. I think there may be an interesting data point there, and then we'll see. I mean, we get data points all the time on production and China and so forth, and it seemed like they're pretty strong to start. So I think in the prior quarters, there's been some weakness in production. There's been this, hey, we're in no man's land, and FSD's nowhere, so we got to look at these deliveries. And you had high inventory in Q1, you had supply issues in Q1, and then you had gross margin issue in Q2, and so everybody had something kind of negative to hang on. I think in this quarter, I think they're going to ramp the hell out of production. I think they're going to get gross margins up again, and I think you're going to see a bigger delivery number, but we'll get some data points along the quarter.
All right. Well, I know you've got a hard, what do you call it? A hard something, a hard
stop.
Stop. That's what it is. A hard stop. I tell you, this getting old stuff. So, Jeff, thank you for connecting in your car, and thank you for updating us as always. It's always great to hear your thoughts on all this kind of stuff. And I will stay on, and we'll talk about what happened to the market today.
Thanks, Randy. Take care.
Take care,
everyone.
All right. So I think most of you are probably very well aware that we had a very good day today. Tesla was back up $9.45. And the market was likewise up quite strongly, with the Dow up just 99, but the NASDAQ was up 451. That does not look like a rotation to me. We had the S&P up 85, 86, and we had the Magnificent Seven was up, all except for Microsoft, because of the thing that was just being talked about by Jeff with regard to their pretty sad amounts of revenue that they're generating from all this massive spend. What the heck? You gotta make money off of the spend at some point, and people are wondering when that's going to happen. So Microsoft was down, $4.57. That's only 1%. All right, let's look at the percentages and all this. We have the Dow was down, I was up 0.24%, but the NASDAQ was up 2.64%. And the S&P was up 1.58. Tesla up 4.24%. That makes it the best of any of the Magnificent Seven. I think. No, I'm sorry. I forgot. Except for NVIDIA, which was up 13% today. But of course, it was down a bunch yesterday. Okay, then we've got the Cathie Wood stocks all up except for 𝐇𝐞𝐈. Everything else was up today. All right, let's look at the bonds. That's where the action is right now. Of course, that's what although there's plenty of action elsewhere, but let's talk about the bonds. We don't have the rest of them available right now. We've got the 10-year is, believe it or not, it's down another 7.2 basis points in the pre-market. We're sitting at 4.032. Very good chance, at least a possibility of going into the threes tomorrow. That would certainly be a real big plus. We have got crude in Texas sitting at 78.48, and Brent also slightly over 80 again, but it was under 80. It may relax again depending on what's happening in the Middle East. We got natural gas also struggling to stay above 2 at 204. But we have gold up another 1940, sitting at 24.92, ready to go into the 25s for the first time ever. We've got silver up 0.94 at 29.21, thinking about going back over 30. Copper finally rebounding at 0.41, is sitting at $4.19. Then the dollar is down against the yen because why? Because the Japanese banks got involved today and propped it up. And the dollar, though, the dollar is actually up against the yen. Go figure that after the prop up. And it's down against the euro. On the Japanese, it's up 0.14. And when you say down against the euro, basically it's unchanged. Okay, Bitcoin down 1,052 at 64,757. So now starting to tail off back down into the low end of its range. Then we've got the equities tomorrow. The thinking is, okay, the Dow up 59 or 0.14, the S&P up 25.75 or 0.46. But then you got the NASDAQ continuing to thwart any idea of a rotation, up 133 or 0.68. All right, well, what can I say? It has been a really, really good. Oh, I forgot to mention. I didn't, did I? I didn't say, here's what happens in the after hours for Tesla. It's 34, up 34, up 0.34. And I'm not going to do that math in my head. I'm going to tell you it is up 79 cents. It's been up and down around that number pretty much the entire after hours time. All right, so what are we going to do here? Scott Walter. Yes, I know it was another long video. We do a lot of long videos on this channel, but Scott's got a lot to talk about, and you probably didn't watch it yet. So when you got some time, set aside some time to go listen to what Scott had to say. He talked about SpaceX. He talked about robots. He talked about Optimus, a lot of stuff to talk about on Optimus. So go back and check that out. I'll put the card right here just to help you out. And then, joining Patreon would be super duper wonderful. Tomorrow morning, we'll have the regular day. As far as I know, we'll have Cern Basher in the morning. We will have Nicholas. No, he's on Tuesday. We'll have Bradford Ferguson at night. And by the way, we've got a new Brian Wong video that he and I did today. Either Friday or Saturday, you'll be seeing that one. It's about Robotaxi. It's about, anyway, you want to see it. It's going to be, it's one you want to wait for. But that's why you hit notify and subscribe and, of course, like. It's been great talking to you.